What's up, guys? Welcome back to the Pullback Effects channel. We're going to be looking at how we're able to do a top-down analysis and keep things organized using TradingView for our personal trading. Okay, so we're going to be looking at the asset class that I normally trade or always trade, which is the US 100 or the NASDAQ. And well, top-down analysis is an analysis that is used in trading for us to analyze the market in various time frames. As you see here, we have different time frames, right? We have the monthly, the weekly, the daily, the 4-hour, 2-hour, 1 hour, etc. So the very first thing that we have to do is go into the highest time frame, right? Why? Because the higher time frame we go, the more likely those levels should respect, or the higher probability those levels that we grab from those time frames are going to be respected. So right off the bat, we have the monthly time frame. So what we want to know on higher time frames are very simple things. The very first things that we want to know are highs and lows. That way we could get the range from the charts, right? Which range are we trading inside of from the monthly time frame? So we're going to grab this external high here. Note that there. And we could go ahead and label it monthly high. Okay. And we could grab this external low here as well. And we could also label it below. Okay. We obviously wouldn't grab any of these lows down here. Why? Because I mean, price is all the way up here. So there's really no necessity for us to be marking anything around our charts around this area here, because it's going to take a few months, possibly even years, for price to ever get down there, if it even does. So the next thing that we want to mark are rapid movements where imbalances are created. So if you look carefully, we could see that there's an imbalance created right here from that high to that low. So that's an imbalance that I could most likely be interested in if price comes down and trades inside of it. Okay. And we also have the internal range high here as well. So we could also label that as monthly high. Okay. And once we have that, we could also label this as monthly low, but I mean, once we drop down to the weekly time frame, we're going to see that as well on the weekly time frame. So there's really no necessity either to mark that low there. So once we have our levels, as you guys can see, there's not a lot of in the charts yet. We just marked a few important levels on the charts here to let us know where price could head towards, right? We want to mark essential levels where price is more likely to gravitate towards. So once we have these levels, we want to drop down to the weekly time frame now. Okay, it's a top-down analysis, so we can go from top to high, from top to bottom. So here on the weekly time frame, we can already see that we have marked out our monthly time frames, right? It's very, very important for us to drag the levels that we marked from our higher time frames into our lower time frame charts. So now that we have our monthly charts or monthly levels, we want to start looking for our weekly levels. And you guys can see there's not much to annotate. I mean, we already have the highs here, the lows here, the high here. Could use this as well, but I think I'm just going to go into the daily time frame, mark that instead. We could mark possibly this swing low here. We have a swing low. So we could mark that as weekly low. And one of the key things or principles that we could use to keep things organized is by either changing the color from each time frame. As you guys can see here, we could mark the weekly time frames levels with blue and mark our monthly time frame levels with white. That's how we could possibly know what time frame is for which levels, right? So we could go ahead and also mark and see there's an imbalance here on the weekly inside of that very same monthly imbalance as well. So let's go ahead and grab that that weekly imbalance. And like I said, we could also change the color or the fill into blue. That way we know it's a weekly time frame, weekly level, and the bigger box is the monthly level. Okay, another way that we could separate or have this more organized is if you look on the right side of your trading view, you could have the object tree here, data window. And you could separate these groups here. We have these two, which are the weekly. So we can select both, right click, create group drawing, and label these weekly levels. Okay. And obviously the rest would be monthly levels. Okay. That way, if either one of the higher time frame levels or lower time frame levels are bothering us, we could just switch them off by clicking on the icon here. You can see that we will only leave the weekly levels there. And we switch them back on. We can have them there, or we could switch the weekly levels there as well, or switch them back on. So this is a way that you guys can also have your charts more organized as well. So let's grab this here. We could also mark that high as the weekly high. And as well as I showed you on the first, I think it was the first video, or if not the second video, we could also save as templates. That way you guys could label this as a weekly trend line or weekly high as a template, and that way once you select it and choose that template, it will give you the same configurations as the weekly template or the weekly levels. But you guys could watch that on, I'm pretty sure it was the second video where I showed you guys how to make your own templates on how to use TradingView. So once we have our weekly levels, right, there's really not much more important levels inside of this area or where price is close to. These are pretty much the most important levels that we have. We could start dropping down to the daily time frame. Okay, and now on the daily time frame, we would have more levels as well. As you guys can see, we have imbalances above us. This here. And another imbalance right there. So you can mark those as well, probably with a different color. You can use possibly pink. And make its own category or group, daily levels, right? And we could also note these lows now here. As a daily low. There. We obviously have a daily high here, but I mean, they're pretty much in close proximity, so there's really not much need to mark that out. These lows here are pretty much marking the imbalance on the weekly as well. So on the daily, we're pretty much done as well, I believe, as to any importance of what else we can mark out. So let's head down for the 4-hour time frame now. And on the 4-hour time frame, well, we have low here. We also have this high here, but this high is really close to, or essentially is the daily imbalance as well. I believe there's liquidity there, so it probably price might want to pop up there. So let's just mark here this low in here. Maybe we could also switch that with like a golden type level. And inside of this daily time frame, we have this 4-hour imbalance as well. So I'm gonna mark this one here, gold, and I'll just make sure. Okay, this is a daily, so let's drop that, drag that one into the daily. And these two are 4-hour levels. Okay. And that's about it, I believe. We could possibly mark. I mean, it's really not necessary because there's a lot of range for it to go all the way up there, but we can mark these highs here as well, just to mark that there's liquidity up there and below here. That's pretty much it there. And now you can drop down to the 1-hour time frame, see if there's anything important. Like I said, on the 1-hour time frame, we're not really going to mark a lot. Like we're not going to go all the way down here, right? We're just going to mark the most anything close to the intraday volatility. And essentially, if you look at the 1-hour time frame, there's really not much more to mark that we haven't already marked on the higher time frames. As you guys can see, we already marked these lows here with the 4-hour, this side here with the imbalances on the daily and 4-hour. And yeah, not much. The 4-hour here as well could be marked as 1 hour. So there's really not much to mark here on the 1 hour. So let's go down to the 30-minute. And on the 30-minute, yeah, pretty much not much as well. We could possibly mark this small imbalance in here. Well, it's not really that small, right? But we could still mark that imbalance there. And anything lower than 1 hour, I mean, we could just use the same color. Let's use a red color. I don't think I like that. Let's use the green color for this one. For the 30-minute time frames. So we can go ahead and mark that. And we also have a 30-minute imbalance here that we could also mark. But see how this 30-minute imbalance is just the 30-minute, right? There's really not any higher time frame imbalances or levels that could help us support this 30-minute as well. So I wouldn't really mark the, or I mean, I already marked it, right? But I wouldn't really pay too much attention to this one as I would to like this one up here that's inside of a higher time frame imbalance. Okay, just to make that clear. So let's go down to the 15-minute. And on the 15-minute, I mean, there's a lot more smaller imbalances here as well. And that you could possibly, instead of just marking the 30-minute, you could just reduce this imbalance into the smallest 15-minute here. Okay, that one there. And then this one here as well. Okay, so you already have those levels as well. And this 30-minute, you could see that there we could also reduce it in the 15 minutes time frame there. And obviously, if you like on these time frames, these smaller time frames you could use or mark the highs and lows as well. Like I said, I'll be using the same green color for anything from the 30-minute or anything from the 1 hour and below. I'll just be using the same color. So that is pretty much it. I mean, unless if you guys want to go lower to lower time frames, you guys could also do that as well. But pretty much that is what a top-down analysis is, or how is it done in a well-organized manner. You want to just select really specific levels without having too much cluster in your charts and paying close attention as to where higher time frame levels overlap with lower time frame levels as well. Meaning that I would be pretty much paying more closer attention to these levels here that have overlaps, and as well as down here with the monthly and weekly time frame that have overlaps, to be able to find a setup in those levels if it either creates a support or resistance, and find a really good pattern that I like to watch or see in the markets. Then I would be considering those levels much more than any other levels that only have one specific time frame as a support or resistance, right? But yeah, this is pretty much how you do a top-down analysis. It's pretty much simple. It's well organized and right to the meat to it, right? And that's going to be all for today. So I hope you guys like this video. If you like it, go ahead and put those thumbs up on the YouTube so it could help me with the algorithm. And I will try to post more videos later on as well.